Nvidia reports fourth quarter earnings after the closing bell on Wednesday, February 26th. Catalyst co-host Madison Mills joins us now for a look at the four things that she's watching. Hey, Maddie.
Hey, Brad, that's right. We're watching supply and demand dynamics, any color on policy impact from export controls to tariffs, and forward guidance, which could include comments on the Blackwell chip and DeepSeek competition. So let's break these down. Starting it off with supply versus demand. We've seen Microsoft, Google, and Amazon missing on revenue expectations in part due to lack of supply. They didn't have the capacity to meet strong customer demand. Will the same be true for Nvidia? The street is looking for nearly $40 billion in revenue. That number would be hard for Nvidia to hit if they can't meet customer demand for the quarter. Next up, you're looking at dynamics with China and export controls. The Biden administration had already restricted Nvidia's AI chips from being sold to China. The Trump administration has signaled an interest in furthering those export controls in order to boost domestic chips production, especially after DeepSeek said that they had used Nvidia's chips to train their cheaper AI model. Another policy to watch here, tariffs on chips. President Trump had teased out a potential 25% tariffs on chips this week. That could be a problem for Nvidia because the company obviously dominates in AI, but there are lower cost alternatives. So if tariffs increase the cost of Nvidia chips, they have a choice. Customers, would they pay up or would Nvidia eat those costs? And if they do, that could put pressure on their profit margins. Lastly, we're looking at forward guidance and the success of Blackwell. Investors want to know when Nvidia's next-gen Blackwell chips will take over as the dominant driver of revenue in their data center business, because that could drive guidance higher due to the high cost of Blackwell chips. And that guidance could also include commentary on that DeepSeek competition, that DeepSeek market drop that happened just before the other big tech earnings. Nvidia has had a lot more time to prepare a thesis around that than the other big tech names. So will we get that thesis around DeepSeek? That'll be a big question, and we will see answers to hopefully all of these on February 26th.
As of this video, Nvidia's rocket ship surge has come to a halt, with shares up less than 3% year to date. And investors are growing increasingly wary of the stock for a variety of reasons. Software for generative AI is still incredibly unprofitable. Furthermore, major Nvidia clients like OpenAI and Meta platforms may be threatened by the rise of purportedly less expensive open-source competitors from China. Let's investigate further to see whether it makes sense to buy, sell, or hold on to shares of this tech behemoth in 2025 and beyond. After the market closes on February 26th, Nvidia is anticipated to release its fourth quarter and full-year earnings. As the AI business struggles with issues including excessive spending and low software profitability, this research will help investors better understand the industry's growth potential and overall health. In 2024, OpenAI lost $5 billion, with a sales forecast of about $37.5 billion, which represents a 70% year-over-year growth rate over the previous year. Management appears to be bullish. Although this growth would be less than the 265% revenue spike from the previous year, it is still outstanding for a $3.4 trillion firm. In contrast, Amazon, another tech behemoth, recorded top-line growth of only 10% in its most recent quarter. The capacity of Nvidia to provide new and enhanced graphics processing units, GPUs, for AI model execution and training is what allows it to maintain its dominance. Although these products are expensive, the company's most recent Blackwell chips are anticipated to cost between $30,000 and $40,000 per unit. They offer such significant performance gains that, when compared to earlier chip designs, they may still result in energy and operational cost reductions. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
And David Boole, he's the Baycrest Managing Director, Equity Derivatives. David, it's great to talk to you again. So talk to me just about the size of this reaction. What should we be expecting?
Well, like you said, options are expecting about a 7% move, which is a little bit less than what options have expected in previous earnings reports over the last 2 years. And exactly, I'm wondering aloud if this singular report, which used to be a massive focus for the market, just matters a little bit less than it used to. Now, I'm looking back at the last 3 times NVIDIA reported earnings. QQQ, the NASDAQ ETF, was about flat that day. If you go back to the end of 2023, early 2024, Qs were up or down 2% 3 out of the 4 times that NVIDIA reported those times. Lately, it just hasn't been driving the overall market action as much as it used to. And then specifically for NVIDIA, this 7% implied move is a lot. That's like $240 billion of market cap that are expected to be created or destroyed. But NVIDIA is such a overall volatile stock that's only about double or 2.5 times as much as it's supposed to move on a normal trading day. So it's a big event, but I'm starting to think that it might not be a one-day surge like it used to if you go back 1.5, 2 years, but it might really set the stage for what the next month is going to look at. So I'm looking at this as a 1 month event, essentially, not really just the one-day jump move this time around.
And so with that in mind, what do you think is the core driver of that move here? Is it demand? Is it ultimately saying, you know what, DeepSeek's not an issue and we're still a beneficiary, even if DeepSeek or other language learning models out there are successful? What is it from your analysis?
To me, the setup, it coincides with what I just said. Maybe it's more of a muted reaction because we already tested the low on this DeepSeek news. We had the dress rehearsal about a month ago or 3 weeks ago, where we saw what happens if the stock goes down 17%. Well, we saw the dip buyers stepped in size. There were some put buyers that came in to hedge those positions, but anybody that was feeling a little bit wishy-washy about potential gains they're sitting on in the Nvidia stock, they had the chance to hit bids on that day that moved lower, and then new buyers stepped in. So the setup I'm seeing from clients is that it's certainly less overowned than it was over the last 2 years. The numbers are likely to be pretty strong, but how good could it be with the rest of their major customers already reporting big CapEx numbers? I think the sense is, what can they say that's going to really drive NVIDIA up another 20% in one day? But if anything, this could be an overhang. Removed, and the stock could then grind higher over the next couple.
NVIDIA's growth thesis has been thrown into question by the release of DeepSeek R1, an open-source large language model, LLM. Despite being allegedly developed for just $5.6 million using NVIDIA's far less sophisticated H800 chips, built to conform with U.S. export restrictions to China, the Chinese app is said to be able to outperform industry leader ChatGPT on important tasks. The market for NVIDIA's most sophisticated hardware may be threatened if businesses are able to produce cutting-edge LLMs using less sophisticated chips, which might limit the company's growth and profit margins. Nevertheless, there might be some positive news for NVIDIA's investors. To begin with, information from the 3 months ending in January 2025 is included in NVIDIA's fiscal fourth quarter report. Since DeepSeek's R1 was announced late in the period, it is unlikely to have a significant effect on guidance. Experts have also contested some of DeepSeek's claims. According to a report by research and analysis firm SemiAnalysis, the company spent more than $500 million on hardware, rather than the $5.6 million its creators say. Due to privacy issues, the app has already been banned from South Korean app stores and is currently the subject of increased regulatory attention over data security. Meta Platforms, one of NVIDIA's largest clients, remained committed to purchasing AI gear. Despite DeepSeek's possible threat, Meta has no intention of cutting back on its AI expenditures. In the long run, CEO Mark Zuckerberg plans to invest hundreds of billions of dollars in the sector. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Francisco Bito, he's FM Investment Senior Portfolio Manager. Francisco, it's great to have you ahead of these highly anticipated results that we'll be getting from NVIDIA next week. I'm curious, what's the number one thing you'll be watching for?
Well, thanks for having me. I'll be paying lots of attention to the demand for the new Blackwell chips. That's one thing. And I'm also interested in see if they're willing to discuss how foreign governments of the U.S. government is going to increase their spending in AI, if they have any hints where how that's going.
Do you anticipate that commentary being clouded by the DeepSeek of it all? I've wondered, because DeepSeek happened so close to some of the other big tech earnings, if NVIDIA might have had a little bit more time to cook on a thesis in response to DeepSeek.
Well, it's not so much about DeepSeek, I believe, in my opinion. DeepSeek is basically a good thing for the AI industry. It's a way of making it widely available to many other potential users. And if anything, it just widens the ecosystem and accelerates the early adoption of AI. So it's a good thing. And I think what people fail to understand is that this is actually a good thing for NVIDIA as well, because the models are not done when you train them. You really got to refine them afterwards. There's post-training that happens afterwards. And you still need the big chips.
Francisco, what do you think the volatility is going to potentially look like?
It's going to be pretty wicked this year. And the reason for that is that it's not only the normal market volatility. You got to add about the uncertainty brought in by maybe tariff policies and those things, and some of that can be pretty disruptive. So we'll see where that goes. And at the very least, I'm expecting some volatility to come out of it.
I mean, it can be disruptive, but we don't have a lot of clarity on those tariffs. Like right now, the only tariffs that are actually in place is the 10% one on China and the 25% on steel and aluminum. Obviously, the deadlines are upcoming for the others, including sector-specific ones like chips. But how much can the market really react to that known unknown at this point?
Well, it's not so much whether they get implemented or not. It's just the threat of having them. That forces the people on the other side or the countries on the other side to think about the diversification, regardless of whether they get implemented or not. So the impact is there, and the uncertainty that it creates is there already. It doesn't.
Neither the fiscal fourth quarter nor the calendar year 2025 appear to be affected by DeepSeek. Additionally, the company will be able to sustain its high growth rate with the introduction of new Blackwell AI processors. The company is still fairly valued in relation to its fundamentals, as evidenced by its forward price-to-earnings ratio, PE, of 32. Despite this, the stock still appears to be a hold rather than a buy. Even if DeepSeek won't burst the generative AI bubble right away, it serves as a caution about vulnerability, particularly given that leading LLM developers like ChatGPT are still losing money. Although NVIDIA's low valuation is alluring, it makes sense given how risky and speculative the business is. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.